Well, I would say that this is even more dangerous than what the US did by confiscating Russian assets. This is even worse than trying to weaponize the dollar system. Because right now, the entire world is dependent on a kind of globalized trade. Right now, the current model, a lot of it is to buy cheap products from China, cheap inputs from Vietnam, repackage it, use it as your own inputs, and then, uh, you know, export it out to the Western countries, whether it is Europe or whether it's the US. You get the money that you reinvest, and the whole cycle goes on. But what Trump is doing, this secondary tariffs, is basically telling the world to break apart their business model, to just shatter it completely.
Hello, everybody. This is Pascal from Neutrality Studies, and today I'm talking to Sean Foo. Many of you will probably know Sean because he's the host of a very successful and useful YouTube channel on geoeconomics, on which he posts daily analysis about the global economy and the impact of political events on various markets. I find his analysis always insightful and realistic, so I'm very happy he agreed to answer some of my questions. Sean, welcome.
Hey, thanks to be here.
Well, it's great that you said yes, because I always wanted to ask you about your assessments of like global assessment of political affairs. But may I just start with one thing, which is like, how long have you been engaged already online in your analysis? Because I've been watching you for about, I would say, a year and a half now. But when did you start?
It all started, I think, around 2022 when, well, basically the entire global and geopolitical landscape blew up, right? We guess we can all remember in 2022, Russia went into Ukraine, and then it kickstart a whole snowball of events, right? We've never seen economic war waged in such a very blatant way. And that really decoupled everything as we know it, right? The current system, the current dollar order, it's all unwinding. We are seeing the rise of BRICS. We are seeing China taking a stand and fighting back against all the tariffs, all the sanctions. So things over the last 2 to 3 years has been ramping up. And I myself, before this, I was an oil trader, and now I'm managing my own money as well. And you can see a lot of dislocations going on. And I wanted to really connect how geoeconomics is with how people can actually be more aware of the investing they do. And we have seen a lot of interesting things happen, especially when it comes to precious metals, stocks, and the entire narrative of America being exceptional is starting to break down as well.
I find that most interesting, this nexus between markets and investors and geopolitics. I think, at least to me, I didn't have that clear an understanding of also how valuable this is actually, the analysis part. And maybe it was just not there, that demand. But do you see that as well? I was at this conference, resource investment conference in Canada in January, and people there in the mining space and the resource space are very interested in like what's the new geopolitical environment means for investment security and so on. This has really gone up over the last couple of years, hasn't it?
Yeah, of course. I think a lot of people, they're now trying to connect the dots between the grand game and how the US is actually trying to use economic policy as a form of statecraft, right? Now, the old world order that we all were living through, I mean, I guess you have lived it more longer than me, but it was all predicated on the Bretton Woods system. Everything was all tied to the US dollar, and how it really gave the US a lot of monetary power, as well as fed into the entire ecosystem of them being one of the most powerful militaries in the world today, right? Now, if we look at how the old legacy system was set up, and this is very important, it came to the point where there was an implicit understanding between the world economy, and the United States. So the agreement was quite simple. The US would provide a lot of liquidity to the world. They'll flood the world with dollars and try to keep the whole system going. At the same time, the US would then buy all these cheap items from the world, all the goods from China, all the resources from the Middle East. And before the decoupling from Russia, they got resources from Russia as well. But right now, what have we seen over the past 10, 20, 30 years? A lot of mismanagement in the United States was going on. The debt levels kept going up. interest rates are now so volatile, it just looks like an emerging market stock. The entire bond yield curve is slightly going up and up and up no matter what's going on. So we have now reached an inflection point where the United States needs to make a change. And this is where I do agree with Trump's sentiments. Something needs to change. Or eventually you're going to hit a wall. You're going to hit a debt financing wall, and the entire US dollar will just crumble, disintegrate, is losing a lot of value as well. However, the problem he's going on, the direction he's bringing the US towards is not sustainable as well. Essentially, he's trying to compress 30 to 40 years worth of work into 3 months. How is that even feasible?
I don't want to go into any kind of Trump's psychology or so, right. But wouldn't you think that somebody like him would have enough access to analysis and advisors who would tell him not to do this? Because, how must it not be clear, especially for somebody who already was president once, that this would take more time for bringing back reshoring the US industry?
Yes, I think all this stems with the US political system itself, right? This is not like China where more or less, the central government is going to be in power for the next 10, 20, 30 years, right? At least. Elections are held every 2 to 4 years in the US, from the midterms all the way to presidential. And we have no idea whether Trump will still have enough clout to push anything in the next 2 years or in the next 4 years. He wants JD Vance to come in. Will it be JD Vance? We have no idea. It could be a Democrat who will just unwind everything. So what I suspect that is trying to really front run everything and compress a lot of the reshoring plans into this small period of time. And if you want to compress everything within just 2 to 4 years, regardless of what your economic advisors say, right? And I think most of them do agree with that you have to throw a spanner into the works. You need to reshock the entire system. But the way it's being done is just extremely messy. Now, let's just take a look at the reciprocal tariffs that he just imposed on the world, right? Now, the original idea was to go line by line, export by export, import item, and say, all right, you impose like a 30% tariff on me on rice. I want to export American rice. You need to bring it down to 10% or whatever, right? And then we'll relent on some other export tariffs. But he just went ahead with some mystical equation that was connected to the deficits that didn't make sense at all. And he just imposed it to the entire world. And because of that, more or less, he just pissed off everyone in the process. So this is not sustainable. It's making a lot of countries in the world very, very angry. And because of that, we are starting to see, curiously enough, a lot of pushback from even traditional US allies. We are seeing the EU actually try to talk with Trump, like a dollar for dollar or zero for zero tariffs. Canada has pushed back with their own tariffs as well. And they're also finding it very hard to convince the Brits to break away from China as part of their trade negotiations. So you can see a lot of countries, they are very used to the old system. And it was not like the Americans didn't benefit from the old system as well.
This is something that surprises me the most, because I would say the US was the greatest winner from this entire setup, in which the US was the reserve currency of the world. Hence, you could basically print your way into like wherever you wanted to go, right? Because there would always be a market for your US dollars. And Donald Trump, on the one hand, says he would punish anyone working with BRICS on undermining the US dollar. On the other hand, he now tries to weaken the US dollar in order to strengthen the local production, as he says.
Sure.
Does this make sense to you? Like, do you see a strategy in that? And what do you think is the ripple effect of both of these strategies at the same time?
Now, here's the interesting thing. I believe that the order of operations are wrong, right? As you say, Trump wants a weaker dollar in order to boost US exports. And on the surface, that does make sense, right? You weaken your dollar, everything else, countries can then buy your exports for a cheaper price. However, he does not realize that US supply chains are not fleshed out yet. It's not like the US has 1,000 mines, 100 mines of rare earths or the refineries there in order to get cheap inputs. They're still importing it from the rest of the world. And so are they with the majority of their steel, copper, aluminum. A lot of it is coming from China, and the majority is coming from Canada as well. So what happens when you try to impose a 10 to 25% tariff? Suddenly all your input costs goes up. And because of that, a lot of companies now, they're actually having a difficult conversation with themselves. All right, sure. Trump wants me to shift my industries to the United States. Makes sense. I go there. I do not need to pay a tariff. And because of that, my costs, I'll be able to make a greater amount of profit. But if I do that, if I actually go into the market, I will not be able to export to the rest of the world. My market will be isolated to the US and only the US. So it just becomes a math calculation. If I spend $5-6 billion to build a factory, how will I be able to make an ROI, return on investment? And if we look at the state of the US consumer now, it is not looking good. Consumer sentiment is plunging. A lot of people, they're going to face $4,000 to $6,000 more in costs every single year. And this is where I think the administration really didn't think things through. Now, Trump's rhetoric is always about, yeah, so they will buy more American products, right? They won't buy the foreign brands. They will buy American products. And on the surface, once again, it makes sense, right? You tariff China at 200%, right? So maybe the goods coming in from China used to be $10, is now $30. Why not just buy an American good at $20 or $25, right? It's still cheaper than China. But he forgot that Americans, like any consumer in the world, they have a third choice. They simply won't buy. They have no money. They won't buy.
We also see from, and you just actually had that video on your channel with Mr. Bassett telling the world that the United States knows exactly what the world needs, and what the world needs is less overcapacity from China. It's that this complaint, and the funny thing is this complaint goes back to the Biden administration, right? Biden came up with the idea to call Chinese exports, not exports, but overcapacity, as if though China was only allowed to actually produce whatever it can itself consume, right? But here, the US runs into the structural problem that these exports to other countries that are not the United States, to third states, are not under its purview. And we see that Trump is trying to create devices like secondary sanctioning, secondary tariff threats of guiding this. What do you make out of this approach?
Well, I would say that this is even more dangerous than what the US did by confiscating Russian assets. This is even worse than trying to weaponize the dollar system. Because right now, the entire world is dependent on a kind of globalized trade. Right now, the current model, a lot of it is to buy cheap products from China, cheap inputs from Vietnam, repackage it, use it as your own inputs, and then, export it out to the Western countries, whether it is Europe or whether it's the US. You get the money that you reinvest, and the whole cycle goes on. But what Trump is doing, these secondary tariffs, is basically telling the world to break apart their business model, to just shatter it completely. Like if we look at how the tariffs on Vietnam it's really tragic. Now, we all know Vietnam, the manufacturers, they're still climbing the value chain. A lot of their products are apparels, t-shirts, shoes, maybe TVs to a certain extent. Well, the profit margins there are like 10, 20% maximum, and I'm being very generous here. So what happens when you throw up a 49% tariff? You just break the entire business model. And because of that, Americans now need to pay a higher cost of price in order to buy stuff. So consumption in the US is going to drop down. So eventually, if Trump does not U-turn on the tariffs, he'll break a lot of economies out there, but eventually they will recover and they'll move more towards other economies and sell to places like Africa, China, trade amongst themselves in Southeast Asia, and even the Europeans, because the Europeans, they are willing to, break apart all their fiscal limits. So they will be spending more. So in a really twisted sense, the US is isolating themselves against the world. It's the US economy versus the global economy.
Yeah, and this, just by the sheer size of the global economy, this is something that I do think is a lost cause.
Right.
The interesting thing is now that even in Asia we see a lot of backlash. I mean, there was a lot of talk about China, Japan, and South Korea actually having meetings and talking among each other what to do. And while I think the Chinese side is overemphasizing a bit the importance of this one, it is clear that Asia is actually that even Japan is looking at Asia now.
Right.
Do you see other moves, maybe also in Southeast Asia, that indicate that maybe we see also in Asia new trade networks or financial networks actually which are lacking,
Right.
maybe being thought about?
Yeah, definitely. I mean, if we look at some of the new BRICS entrance members, those that are either full-fledged members or they're part of the new BRICS trading network, well, we have seen Indonesia, which is one of Southeast Asia's most populous nation, together with Malaysia. They're working with China through BRICS right now. And why are they doing such a thing? Because they want to climb up the value chain as well. Now, if you look at how the US is actually playing their cards, Trump is trying to turn the US into a very weird game of autarky where they're trying to be self sufficient in everything. That might not be the explicit plan, but everything seems to be moving towards that game plan. Basically, the US is trying to consolidate the entire Western Hemisphere. However, when you look at Asia, that basically means that you might not get much business from the US. And if you want to sell to the US, prices are so high, you need to bring down your own cost of production as well. And there's only two ways to go about it, right? You either climb up the value chain, you make something that has higher margins so that you can withstand a higher tariff from Trump, or you try to get your inputs down to the point you can climb over the tariff wall. Maybe that's 10%, maybe that's 20%, but you need to restructure your entire economy in a way. You need to find other trading partners, you need to find other trading networks. And the only major economy out there with a size comparable to the US is China. And they are going out and so called globalizing the world, which benefits their own economy as well, but benefits these countries as well. So what the US is actually doing is handicapping themselves in the big game, in the entire macro game. And I don't think that's a very smart way to play your cards.
But you see it as an outcome of the structural setup of the United States, right? This is just what the system produces, not so much an outcome of a grand strategy, of course.
Yes, I mean, here's the very twisted thing. Trump says that it's a grand strategy. And in a sense, I think this is the only cards that he has left to play. Now, as we alluded earlier on, that the US actually benefited a lot from globalization, especially from the dollar system, right? You mentioned curiously that the US has the ability to borrow money from the rest of the world at more or less cheaper rates. Now, this is extremely powerful advantage if you're able to spend it wisely, right? Just imagine the ability to borrow endless amounts of money. You can actually funnel it to build supply chains. You can funnel it to increase your footprint in Africa, build up more mines, get more resources, and channel it back to the US. At the same time, you can actually fight a long, sustainable subsidy war with China. China's going to subsidize their industries no matter what we say. And in order to, go head to head with them, we need to do the same thing as well. And if you're the US, you have a lower cost of capital, you can do it rather sustainably as well, but they're not doing it. What have we seen over the past 10 to 20 years? A lot of weird military adventures around the world that's been burning a lot of money. It's not sustainable. At the same time, you're spending a lot of money, for example, imposing senseless sanctions on Russia, especially when it comes to oil. They just didn't work, right? What could you have been doing? Use the money to build up your own oil infrastructure, pump out more oil, or go around the world and start building up more relations with countries that allows you to harvest more rare earths. Like what we are seeing in Ukraine right now, getting Zelensky to sign the deal, that is like a Hail Mary agreement, right? It's so haphazard. We have no idea what's under the ground as well. And even if it's chock full of resources, who knows when the war of Russia is going to end? It might end next year or could end in 10 years' time. We have literally no idea. And even if it works, will the Russians be happy with giving you all the resources as well? So there are a lot of big ifs, what, and I think the entire political system and economic system has forced the US to really fight with a diminishing amount of chips.
One thing or one kind of thought that I can't escape at the moment is that the United States and Europe too, actually, and many Western analysis still is somehow handicapped by this idea that everything needs to be measured in money, and at the end of the day, money will run out, when in fact the real constraints are, of course, the real economy, resources, energy, production capacity, right, at home.
Right.
Do you have the knowledge and so on? And if you look at the Chinese system, which is way more centralized, I mean, it is a market economy, but it is not capitalist in the sense that people who hold the capital then get to say what's going to happen and allocate resources necessarily. I mean, it's a political process that's still mostly in charge. How do you think that this contest of the systems at the moment is working in one or the other's benefit?
Well, I think at the current moment, China is winning by quite by a big degree, right? Right now, the US, we have seen fragilities in the entire US economic system, especially when it comes to the financial markets. Now, Trump used to say that, he'll be able to power through a recession. He'll be able to power through a lot of economic disasters, and he doesn't care that US stock prices are going down. But what he cares about is the US bond market breaking, right? Now, I think we have seen over the last 2 to 3 weeks.
Can I ask you, because I actually don't understand it, why is the bond market so pivotal to central government?
Okay, sure. So when it comes to the bond market, it's basically an avenue for the US government to borrow money at whatever prices that they have. So the lower the bond yield is, the more cheaper the US government can borrow money to keep the entire system going and to actually fund their government expenditures, right? So the US today, I think they run around 1.8 trillion to $2 trillion worth of budget deficits every single year. And that has to be borrowed from the bond market, right? So it's much better to borrow at, say, 2% yield compared to 5% yield, right? And as we mentioned before, the US is going more or less towards a debt crisis. So Besson and Trump, they want to delay the implosion for as long as possible. The hope is for you borrow money at, let's say, 4%, and the economy grows at 6%, which is not. But if you are able to create a kind of advantage in terms of growth, you'll be able to outgrow your debt. That is the game plan. But when the US decided to tariff the whole world, everyone right now, every investor out there, they're looking at the US economy, at the financial markets. Why should I put my money into the US, buy US stocks, when I believe the economy is about to enter recession? And we're halfway there already. GDP has collapsed by 0.3%. And if that's the case, I'm going to pull my money out, the dollar drops. Now, all the bondholders are freaked out. Okay, why should I lend the US government money at 4 to 5% when the dollar can collapse by 10 to 20% over the next 4 years? Effectively, I'll be lending my money to the US government for free. What's the point of doing that? Or I might actually lose money at the end of the day. And because of that, borrowing costs really starts to creep up, right? We went from 3.8% and we hit a recent peak of around 4.5%. And because of that, the US has very constrained ability to actually spend their way to subsidize their industries, to build their own supply chains. However, China can. That's the big difference. China's bond yields now is below 2%. So their cost of borrowing is 50% cheaper than the US, at least. So China has a lot of room to actually stimulate their economy, pump a lot of money to the system. However, the US right now is very constrained.
That I wonder though, like at the end of the day, wouldn't the US at some point be able to say, like, okay, we are just going, we just don't care about the fiscal deficit anymore, although that's the opposite of what Trump has been saying so far. But the sheer size still of the US dollar and the importance of it, I mean, if they just financialized and used I mean, not the figuratively, the printing press, in order to finance themselves, especially in these key areas where they want to grow, and even start giving like massive amounts of subsidy, which would of course be the other way to incentivize the a return, or is the other way, and it is also being used in order to get a return of this industry to the US. What do you think would be the outcome?
At this point, when half of the world's pissed off, actually 90% of the world's pissed off, you just lead towards an inflation crisis. Right now, there's already a breakdown of trust. Trump, in a sense, it's very hard for him to U-turn from his current trajectory. Now, if he suddenly says that, all right, we're going to U-turn the tariffs and we're going to start flooding the world with liquidity, it just shows that the entire US system, the entire financial policy, trade policy is so uncertain that we are now moving towards another lack of trust in the US dollar itself. So we're going to lead to another situation where inflation actually starts to soar even higher than before. Now, we just need to look at the price of gold over the last 3 to 4 months. It's unprecedented. It went from $2,500 all the way to $3,500. Now, this just shows that trust in the dollar is starting to fall. I think we've really come to the point that there's very little room for the US to actually maneuver around. The only way I see it is for the US to undergo a long period of austerity. Now, let's not forget how China actually built up the supply chains over the last 20 to 30 years. It was not easy at all. Now, when they started entering the World Trade Organization, I think it was the year 2000 or 2002, around there, the main idea of the Chinese economy eventually becoming the superpower that it is today is for the mass people to underconsume and to produce more. So a lot of people during that period of time, they were living below their standards. And that gave the government enough room to actually allocate a lot of the capital towards industrial production, right? So you had decades of people actually not living a very high standard of high quality of life compared to the Americans. And because of that, the success kept compounding time and time over again. But the problem is, can US citizens, can the Americans actually swallow this bitter pill that we need to live below our standards for 10, 20, maybe even 30 years, go through a very painful deleveraging, austerity programs, maybe some benefits and social obligations will be cut as well. At the same time, we'll need to scale back the military. We'll need to bring a lot of resources back to the United States, right? We need to work with the world and cut them good deals so that they will trust us more and we'll be able to get their resources in a sustainable way. And that involves a lot of spending that is not done on the American population. Can they stomach it? And this is the big worry that I have going forward. And I've no easy answers for that because I've no idea whether this even crossed Trump's mind. Because right now it's all the way America first, make America great again.
Thanks for that idea. I'm personally skeptical towards austerity methods because of that, because they create all of these very negative effects for people on the ground. And let's not forget, the United States is one of the most unequal societies on earth, and a lot of people don't have it already pretty bad.
Right.
If you look at China in these 30 years, they managed to lift out hundreds of millions of people out of poverty and into the middle class, and thereby also then now generate a consumer market for themselves, right? But the question on my mind then also is if it would be possible to just also work on the financialization part, because this is something to me that is not often raised. Like the United States used to have a capitalism that was built on the idea of having money in the hands of private owners who then reinvest into their industries, and where profits are being generated. But over the last 30 years, we've seen that a lot of this capital has been sucked up into the financial system, where it's being used as a speculative casino type of investment instead of going back into the real economy. Is that something that you think matters, or is this just how modern markets work?
Well, it's a mixture of both. I think that really matters, how you allocate the money. However, the US, for better or worse, they are really a free capitalist society network, which means the government is not going to tell you how to run things. This is not the Chinese system where it's a top-down approach where the government tells state-owned companies you must allocate your capital to activities A, B, or C. The US is that you have all the capital, you go and then you spend it however you see fit. And I think this is where future economic systems have to evolve beyond that as well, right? Because if you have a government in China that's actually making good decisions, telling their companies where to allocate capital, and you're not, and you have a rise of a class of Wall Street barons, there's no other better term to put it, who just buy back their stock and then they just invest in all kinds of weird instruments. They do specs. They try to get a lot of people to invest in very questionable instruments where they can extract a lot of capital. The incentives are all messed up. So if you want to go to a place where the US is able to compete effectively in the world economy, I think you're right about a reallocation of capital. However, that would mean unwinding the entire framework of American democracy itself. So I think right now we are in a very weird state where I think we are on the runaway train towards a financial crash, and maybe that might prompt a rethinking of the entire system.
And maybe let's spend another couple of minutes on your country, on Singapore. I haven't talked about it on this channel very much, but how is Singapore now managing this situation? Because Singapore is the financial hub of Southeast Asia.
Right. Well, the thing about Singapore is that we are caught between the major powers, right? We can't afford to be leaning to either China or the US, and whatever we do is in our best interest. So the thing about Singapore is that we are more or less a free financial market system as well. We let money come in. We let a lot of people invest in our property all the way to our stock market as well. And we can't afford to do anything different in a sense, right? Well, let's just look at how our relations with the US and China are, and I can more or less describe to you the delicate balancing act that we have, right? A lot of our banks today, they are all connected with Wall Street banks, and a lot of financial flows are coming to Singapore. So we need to maintain a free market economy as well. And I think the US is one of our greatest export partners, but we buy a lot from China as well. I think China is even a bigger trading partner to us than the US. So a lot of countries today, especially Singapore, we are caught in this tariff war. We want the tariffs to come down, but we can't be seen leaning to either country, right? Let's say you lean all the way to the US, to China. What if the US decides to raise the tariffs on you, right? But let's say you lean too closely to the US. What if China's market starts to boom? The stimulus actually creates a very powerful consumer class. Now chances are we might face a resistance when trying to export over there. And so I think for all the smaller countries, it's going to be tough for us to really see how the winds are blowing. So I don't think it's very easy for Singapore as well.
No, not at all. But all smaller countries are caught in that, right? But Singapore did this fantastic, not just transformation, but growth since the end of the Second World War, right? And your former Prime Minister Lee Kuan Yew is most famous for, of course, having created not just an economic strategy, but financial strategy and a production model, and making sure that as a city state you can benefit of the economies of the others. If you look at how Singapore runs today, what is the one thing that you think it does very well, and what's the one thing that you would say we need to change that immediately?
All right. Well, I think for Singapore, the way that it's being run well is how we allocate our capital, right? Singapore, we have a very delicate balancing act where in every modern society, the people who have and the people who have not, the gap is slowly rising, right? And we have a kind of system where we allocate money from the rich to the poor in a more or less efficient way without breaking the entire system. So we have a lot of subsidies, government subsidies for houses, for homes. I think the statistics is that 80 to 90% of Singaporeans, we own our own homes, which is quite unprecedented in the modern society, especially when it comes to Western economies, right? So when I try to draw experiences from this to the US, I would say that the US would need to have a kind of gentle redistribution system where some of the money is actually goes and forms a bit of a safety net for people, as well as to really give them opportunities in sectors that are growing. And for us in Singapore, we are trying to climb the value chain as well. We are moving more towards AI. We are moving more towards semiconductors. We are partnering with, for example, Malaysia, so that they can utilize our expertise, our brain power. We can utilize some of their land, which we have a chronic shortage of, obviously. And if we look at how the US is playing their cards, it's quite bizarre, because instead of going up the value chain, like the US, they have a commanding presence when it comes to AI and all the services out there, right? Think of your Netflix, think of Google, think of Meta. All these are world-class companies that have such a strong moat. You want to build upon it. But we look at the movements that Trump is trying to do. He's trying to regress the US back into the age of steel production. Steel is the real deal. And because of that, you're trying to bring back jobs that really won't exist in such an advanced economy over the next 10, 20 years. So let's say you manage to get back some steel workers, right? You manage to increase employment by 5 to 10% there. But is that coming at a cost of your winners contracting or not growing as fast as they could? So I think this is the big lessons, maybe the US can learn from Singapore as well. But it's more about how do you allocate the capital correctly.
Yeah. Where is capital productive and where is it not? Right. Do you think that that ASEAN and Japan will actually work more closely together, or do you see any signs of that, concrete signs at the moment?
Well, I think definitely ASEAN and Japan has to work closely together. I think trade is also growing, and it all has to stem with the US being isolationist. Sorry, I can't speak. Isolationist, right? So because the US is isolating themselves, Japan is very dependent on the US economy. And we have looked at all the various negotiations between the Japanese and the US. I think Japan has not been given a very great deal. A lot of cars, a lot of auto exports from Japan all the way to the US, they're now being compromised. We have a 20 to 30% tariff being hit on them, maybe around 25%. So Japan now has a very interesting dilemma. They need to find other markets to export their cars out to, right? But at the same time, you also don't want to abandon the US market as well, because the US market is one of the few markets out there that is keeping cheap Chinese exports from going in. So that is a tariff market for you. So I think Japan is now in a very, very weird situation. They don't want to deindustrialize their country. That's obvious. No country wants to deindustrialize their country and move all the way to the United States. Because if you move all your industries there, you're at the mercy of the US. That's one. There's a lot of geopolitical risk. Maybe in the next 50 years, we do not know as well. At the same time, you'll regress your own industries back home. And then Japan just becomes like a HR HQ for all the companies around the world that just has the label Japan. You don't want that to happen. So I think a good solution for Japan is to work closely with all the Southeast Asian countries like Indonesia, countries like Vietnam, countries like Thailand, where you can actually build your plants there, access cheaper labor over there, as well as to get your footprint in the region. Now, how Japan is going to compete with China on that, I have no idea. Maybe they have to come up with some kind of strategic agreement, you take this region, I take that region. I have no idea, but I think something needs to be worked out.
Yeah, but at the moment, over the last couple of years, we've also seen this very interesting movement of the Japanese yen just falling off a cliff. And while a lot of people said this is bad, I always thought, like, look, this is going to make Japan way more competitive again, and it's actually going to bring a bit of an incentive to bring a bit of manufacturing over again. It also reduces the gap, let's say, between the Thailand and Japan, right? So the incentive here is now, or the working together also for instance for Thai companies to work and produce in and with Japan is getting easier. What's your take? Do you think the Japanese yen overall will continue to decline?
All right, so let's talk about currency devaluation or decline, right? So there are two ways to look about it. When you talk about absolute value, every currency in the world is going to decline against real stuff, against property, gold, stocks. So I think we can set that conversation aside. But when you're talking about against the dollar, I think the yen is going to see a period of appreciation because a lot of money is still leaving the US. And there's a lot of uncertainty with US trade policy. But here's the beautiful thing about it. If all currencies, except for the dollar, they all appreciate against the dollar, you are now at more or less the same level playing field, right? Especially when very few exports are now going to the US. So the main, dilemma for Japan is how do their currencies compare with other countries' currencies, which is even more intricate when you're just comparing to the euro, or when you're just comparing to the US dollar. So I think right now, Japan has quite a bit of a mixed bag because they're trying to tackle with their own debt crisis, right? 250% is no joke, national debt to GDP. But at the same time, I think Japan needs a weak enough currency, but how it trades against the dollar, I think over time is becoming less relevant.
I think so too. And that goes for the other nations as well, because as you correctly said, the United States is currently undermining its own game. Sean Foo, people who want to read and see more of you should first go to your YouTube channel, of course, but is there any other channel on which you provide your analysis?
Not really. I think everyone can just go to Sean Foo right now. Just go to youtube.com/Sean Foo Gold. Sean Foo Gold, I can find me and all my analysis there. I talk about gold, see over the economy, stocks, geopolitics, and economics as well.
And you do so in a very well informed way with a lot of graphs, which I always appreciate. Sean Foo, thank you very much for your time today.
Hey, thanks so much, Pascal. Good to be here.